Namaskar dosto, welcome back to Dhwaj Stock Info. Today we are going to discuss an important subject in our episode 21. How much tax will the government take from your profits? The complete capital gains tax guide ITR filing deadline July 31st next month July 31st is the ITR filing deadline for the financial year just ended. Every rupee of profit you made selling shares this year has tax attached to it. Do you know how much? Most retail investors do not. They know they made money, they do not know what they owe. In episode 20 we calculated our financial freedom number, but that number was before tax. Every time you sell your shares to fund your life, the government takes a share first. Today I show you exactly how much. The two numbers that decides your tax bill, 12.5% and 20%. A live demonstration of finding your own tax statement just in 2 minutes. And one legal strategy that can reduce your tax bill every single year if you use it before March 31st. This episode 21, the tax aware investor. Next, section 2, LTCG versus STCG, the basics. When you sell the listed shares, the gain is classified by how long you hold it. Held for 12 months or less, it is a short-term capital gain, STCG. Held for more than 12 months, it is a long-term capital gain, LTCG. That single date, 12 months, decides which tax rate applies. In budget 2024, these rates changed significantly. STCG on listed shares increased from 15 to 20% and LTCG on listed shares increased from 10 to 12.5%. But there is a small relief. Yes, the LTCG exemption increased from 1 lakh to 1.25 lakhs per year. This means your first 1.25 lakhs of the long-term gains every year is completely free. Tax free. Only the amount above 1.25 lakhs is taxed at 12.5%. Remember this number, rupees 1.25 lakhs. We come back to it. Now LTCG versus STCG, old rate versus new rates. Screenshot this. Factor holding period before budget 2024, 12 months it's listed. From July 23, 24, 12 months it's also listed. What changed? No change at all. Then the next factor will go STCG rate. This is important. Before budget 2024 it was 15% only. From July 23, 2024 it has been changed to 20%. What changed? Plus 5 points higher. Then the factor LTCG rate. Here before budget 2024 it was only 10%. But from July 23-24 it has been increased to 12.5%. What change? 2.5% higher. Then the next factor LTCG exemption. Before budget 2024 it was 1 lakh per year. From July 23-24 it has been increased to 1.25 lakhs per year. What changed? Plus 25,000 of relief. Now coming up a live demonstration. Open your broker app right now and find your capital gains statement for 25-26 in under 2 minutes. This is the exact document your CA needs for ITR filing. Section 3, live demo, finding your tax statement. Open your broker app or website live. Most practically useful section of this episode. Every SEBI registered broker provides a capital gains tax or tax P&L statement. This is the exact document that converts your trading activity into LTCG or STCG number. Let me show you where to find this. Yes, fast. This is live demo. Now I am showing how to download your capital gain statement or profit and loss summary from your broker portal. Go to your broker portal. I have come to your broker portal. Give your login ID. Log into your broker portal. You can see the broker portal almost Zerodha, Grow or Upstock or ICICI or this IFL market. All are almost same excepting from few menus here and there. That's all. Almost are all the same. Then go to the top here and click here the drop down menu and you can see that report section here. It will come to the reports. Look for the reports, profit and loss summary realized, or it may be some capital gain statement, something similar to this. Click on this, then it will come to the menu here. Select the product. There are four, 5 products are there: cash, commodity, currency, forward, FO, etc. are there. Click. I'll select the cash. Now it will ask for year range, which year you want, 25 and 26. There's a financial year. Then click on the show button. It will download. It will download the report here. It will download the report here. Now we shall see the downloaded report. Okay. Then I'll see the downloaded report. Go to the downloaded report here. Come to the downloaded reports. You can see the reports here. Go to the bottom of the report. Lot of stocks are here. Here you can see the total amount. See, this is the total STCG income, and it is total STCG income, and here is the LCTG, long term capital gains and short term capital gains. It has been segregated according to the holding period here. So you have to take these amount into consideration and calculate the tax on the amount. I am showing that tax calculation also shortly now in this episode. This is about downloading your capital gain statement. Now in the previous section you have learned how to download the profit and loss summary or capital gain statement from your broker portal. Now I will show you how to calculate tax on the said income. So long-term capital gains income and short-term capital gains income has been segregated as per your broker portal. Now we shall assume 3 scenarios here to understand it properly. Now scenario number 1, here I will show you. Scenario number 1. In the scenario number 1, your long-term capital gains income as per the profit and loss account, profit and loss statement from your broker portal. Okay, we shall assume it to be 1,25,000. Okay, 1,25,000 amount in rupees. Okay, here it has come. Next, the less exemption under section 112A. You have to put here 1,25,000 per year is there. You have to enter that. Then taxable income. You will arrive at a taxable income here. Now put a formula. Your total income minus the exemption, whatever here, is the taxable income. Here the taxable income is 0. It has come to 0. So you need not pay any tax on this. In the scenario number 2, what we shall see here, scenario number 2. Okay, in scenario number 2, same, your long-term capital gains as per the profit and loss statement from your broker portal. See, here you will assume it to be 3 lakhs. For example, illustration purpose, let's assume it to be 3 lakhs. Then same, apply the said exemption here. Apply the exemption, that is 1,25,000 as per 112A, 1,25,000. Okay, so the taxable income, what is the taxable income here? 3 lakh minus 1,25,000. This comes to 1,75,000. So here you calculate long-term capital gains at 12.5%. Here take this amount 1,75,000 multiplied by 12.5 divided by 100. This is the amount you need to pay. 21,875 is the total amount of tax you need to pay. Now section I will assume the third scenario number 3. Scenario 3. Here we shall assume the capital gains tax, short-term capital gains tax. We already learnt long-term capital gains. Now here we'll calculate short-term capital gains as per the profit and loss statement from your broker. We shall assume it to be 2 lakhs. Okay, 2 lakhs. There is no exemption as per our IT Act. You have to pay full flat on the amount, so exemption is 0. So what is the taxable income? The same is the taxable income here. So taxable income comes to 2 lakhs only. You have to calculate short-term capital gains at, this is 20% flat on the income. Okay, come here, take this STCG income multiplied by 20 divided by 100. This comes to 40,000. So 40,000 is your total short-term capital gains you need to pay to the income tax department. That's how you have to calculate both LTCG and STCG. Capital gains tax calculator, illustrative example. Only screenshot this scenario. LTCG exactly 1.25 lakhs, gain amount rupees 1.25 lakhs, exemption is 1.25 lakhs, and tax owed rupees 0. It's a fully tax free. Next scenario, LTCG is 3 lakhs, capital gains, gain amount is 3 lakhs, and exemption is only 1.25 lakhs for you. The tax owed, if you calculate on this, 21,875, 12.5% on 1.75 lakhs. Next scenario, STCG at 2 lakhs, gain amount is 2 lakhs, and the exemption here is none. Tax owed rupees 40,000, 20% of the full amount flat. Then the next scenario, combined LTCG 3 lakhs plus STCG 2 lakhs, gain amount is 5 lakhs, exemption you have only 1.25 lakhs. The tax owed has increased rupees 61,875 total. Illustrative only. Cess and charges may apply. Always verify exact figure with the CA before filing. Next section, the buyback tax trap, a rule that changed in 2024. Genuine alarm. Most investors have not updated their understanding of this. For years, buybacks were considered the tax efficient way for a company to reward its shareholders. Why? Because the company paid the buyback tax and the proceeds in your hands were tax free. That rule changed effective from October 24. Now, when you tender your shares in a buyback, the entire proceeds you receive are taxed as a dividend income at your slab rate. Not 12.5%, not 20%. Your full income tax slab rate, which for many investors is 30%, and the original cost of these shares becomes a capital loss.
Next, section number 7,
which you can offset against other gains. For the investors in 30% slab, a buyback that was once nearly tax-free can now mean 30% tax hit. This connects directly to the short 26 dividend yield and short 40 free cash flow. When companies use FCF for buyback, the tax now falls on you, not on the company. Before you tender shares to any buyback, check your tax slab. The decision has changed completely. Next section, the annual exemption strategy, the most actionable strategy in the episode. Remember, rupees 1.25 lakhs, the LTCG exemption here is the critical fact. The exemption is per year, and if you do not use it, it does not carry forward, it is gone forever. The strategy widely used by the tax-free investors is called tax gain harvesting. If you hold quality long-term stocks which are unrealized gains each year before March 31st, sell shares worth approximately 1.25 lakhs of long-term gains. Pay zero tax because it is within the exemption. Then if you still want to hold these shares, buy them back immediately. Your cost basics is now higher. When you eventually sell for real years later, your taxable gains is smaller. This is completely legal, widely practiced at the cost only, brokerage and STT on the round trip. But the exemption rests every April 1st. Use it or lose it. Always confirm the exact proceeds and any recent rule changes with your CA.
Section number 7,
connecting to your freedom number plus action plan. In episode 20, we calculated our financial freedom number. That number assumed every rupee you withdraw reaches your pocket. In reality, when you sell shares to fund your life, a portion of that withdrawal is LTCG taxed at 12.5%. above 1.25 lakhs per year. A rough adjustment, if half your withdrawal each year is gain, your effective tax drag is approximately 6% on that withdrawal. Build a small buffer into your freedom number for this. 5 to 10% extra is a reasonable starting point. Your action plan for today. Step number 1, log into your broker, download your capital gain statement for 25-26. Step number 2, note your total LTCG and total STCG separately. Step number 3, check you have used your 1.25 lakhs LTCG exemption this year. If not, and March 31st is approaching, consider March 31st already gone. What to do now? Step number 4, if you hold shares eligible for any buyback, check your tax slab before tendering. Step number 5, share your capital gain statement with your CA well before July 31st. Comment below what is your LTCG amount this year. No personal details, just the number. I reply every day and follow. Episode 22 is coming next. Please subscribe, like, share with family and friends, and also please support me for doing such good videos for you, and thanks for watching.